Welcome back, Bradford. It's been a couple weeks since we had you on. You've been off touring the world, Europe at least. So we got a lot to get into today. Lemonade had earnings and stock was up. I didn't see where it closed, but up around 27, 28%, something like that. Lots of good news while you were gone. But first of all, welcome. And how was your trip?
Thanks. Yeah, I went on a cruise starting in Barcelona, so I had a few days in Barcelona, and then hit Lisbon, Portugal, a couple ports in Spain, and my wife saw the home of her father in the mountains and got to see one of their relatives that still lives there. A small village of only 15 houses or so. Pretty wild. Then after the cruise, spent 4 days in England and saw some castles, palaces, and yeah, it was a great trip.
Yeah, glad to hear about it. Although I think probably most of our viewers are a bit more interested in a little Lemonade unpack
Yeah.
than some of the details. So Lemonade reported early this morning, around 6 a.m. I think they posted their earnings report, which was kind of unusual. But they had a lot to be proud of in there. So I think one of the things that stuck out most to me was just this chart at the beginning. Here, let me bring this up here. So this is just, a quarterly kind of look at some of the most important metrics that they have. So you've got their in-force premium year-over-year growth rate. So you can see not only is it growing, but the rate at which it's growing is actually accelerating. So you're going from like 18% year-over-year growth to like the 20s, then to 29% in this most recent quarter. So this is obviously just a reflection of the fact that they're spending more on growth spend, but also I think this quarter we got a pretty nice boost from car expanding. Then loss ratio, which, what you kind of think about it is like the inverse of your gross margin. So you want that number to be coming down, and just very steady progression. So you've got, two trends there going in the right direction. And then kind of putting it all together with a bit of an income statement chart at the bottom here, you can see the in-force premium growing. I mean, it's kind of wild. It's not quite doubled, but getting close to doubling in just 2 years. And this is the thing that blows my mind. The operating expense less the growth, so what they're spending on new customer acquisition, is actually down 7 million when you look at Q2 of this year compared to Q3 of 2 years ago, or 3 years ago. So this is core to our thesis in the company, is that you got some double exponentials on the revenue side, but then because they're leaning so heavily into AI, not just on pricing and the kind of their customer facing capabilities, but they're kind of turning AI inward and saying, as an organization, how should we be structured to take advantage of AI? And so that's what's enabling them to support this kind of crazy top line growth that they have while actually stripping out costs.
Mm-hmm. Yeah, a lot of the people that interact with us, they're engineers, they're salespeople, consultants. There's some small business owners, and what you want to see in any business is leverage. You want to see your costs controlled and your revenue and profits growing faster than your costs are growing. Essentially, costs are flat, and over 2 years, the revenues are up at 80%, or 3 years. So still, it's very impressive, and that's exactly what you want to see in a business, and it verifies the story that Lemonade tells, is they're making an autonomous insurance company, or highly automated.
Yeah. They also dropped today an investor deck, which is something pretty new. I think most of the information in there is kind of recycled from previous presentations, but it was still kind of nice to see. But one of the charts, I should have pulled it up, but I don't have it here. Maybe Jordan can look for it in the background on their investor deck. But they basically show the premium per customer that they had like a couple of years ago to where it is now. They just crossed $400 of premium per customer. The US average is about 10x higher than that. So it's about $4,000. So, right. I mean, if you just think of the kind of bundling that's happening where you're going from these beginning of life or beginning of adult life, let's say, kind of cohorts of customers that, maybe are just dabbling in renter's insurance and they've got a pet. So very small dollars that they're actually insuring or at least paying to Lemonade with premium. as you all of a sudden added a car, okay, that might be $1,800 a year. You add in home, all right, maybe that's $1,000 a year, something like that. So then all of a sudden, just by nature of these cohorts aging up in the kind of normal, going from your 20s to your 30s to your 40s, like if nothing else changes, like you might just 10x your business just on the bundling that's going to happen as your customers naturally go a bit older. So this isn't exactly the chart. It does show the premium per customer increasing from 360 to 402. But there's another one where it actually shows the US average at about 4,000. So like it's just when you look at the kind of all the different areas of blue sky that Lemonade has in front of their blue ocean that Lemonade has in front of them, it's their premium per customer getting to kind of US average levels. It's them being like nobody in the car insurance business, and then just thinking of all the revenue growth that they have while keeping operating expenses like flat-ish. I mean that's why we get so excited about this company.
Now, I might be overstating things, but essentially, Lemonade all but stopped writing car insurance. They greatly scaled things down from their metro.
Do you mean
home? No, I feel like car, they greatly scaled that down. I could be wrong.
Well, they did for a while, but they're expanding now, into Colorado and Indiana. So I think they're leaning heavy on the growth now.
Right. So they essentially they relaunched their car insurance offering. And the big question was, can they do so profitably and with low loss ratios? And what they're showing now today is that they've gotten that loss ratio down to 82%. Still a little room for improvement, but now they can profitably write car insurance while they quickly expand it. And they're very excited about Colorado, how profitable it's been for them right away. Yeah, that's kind of my translation of what they were saying.
Yeah.
And I think the expectation is that Indiana is going to be the same. So they've essentially, I believe, figured out car insurance. So that was incredibly bullish. Also, what they've done with Loco in Europe and being able to handle multiple lines and multiple countries, have it automate a lot of that business. It's allowing them to quickly expand. For me, Matt, what's impressive about that premium per customer is it's still growing despite them quickly growing their European business where the premiums are lower per customer.
Yeah. So for those who are not as in the Lemonade weeds as you and I are, what is Loco and why is it so exciting?
I think it stands for Lemonade Core, and I want to do a video about Lemonade Core with you, Matt. How's that sound?
I'm available.
Okay. And what it does is it takes all their experience in insurance. They've been doing this for 10 years. They've been gathering a lot of data. They've had to do a lot of regulatory filings, changing prices, and adapt to how to price insurance. And Loco essentially handles a lot of that for them. So it's highly automated. It makes adjustments, and they can really lean on it. So it's not like totally autonomous where like Andre Carpathy, could go on vacation at Tesla or whatever, but it's
in the spirit of Project Vacation, let's say.
Yeah. Their headcount, though, did increase slightly this past quarter. I think it grew by 6%, but the revenues grew by 29%. And that headcount increase was over the last 12 months.
Yeah. So, I mean, kind of putting this all together, and by the way, I'm seeing a fake Farzad comment in here. There's no way that could actually be Farzad because he would never compliment me. So someone took advantage of his account, I think. You're a beautiful person wherever you are, Farzad. So, but going back to the Lemonade, kind of thesis with everything they're able to kind of automate. It does a couple different things. I mean, obviously, as like investing in finance nerds, we love that it, really makes for a lot of operating leverage, which is going to, create a lot of earnings. But even they're extremely focused on doing it in a way that doesn't compromise the customer experience. So they, are paying more than 50% of their claims in under, I think it's under 1 second or under 3 seconds, something like that, more or less instantaneously with zero human involvement. So obviously that eliminates cost if you're not having to pay an adjuster to look at every single claim. But on top of that, not getting stuck in the rigmarole of 3 weeks, trying to get a call back from your claims adjuster, that just does great things for your customer satisfaction. And if you look at their ratings on the App Store or anywhere, all the insurance companies are rated 1 star and they've got terrible reviews because there's definitely some negative bias. If you have a bad experience, your claim is denied, you're going to go and leave a 1-star review. If you never filed a claim, you're probably not going to have an issue. But Lemonade is rated 5 stars because they're delighting customers with a product that it almost seems impossible to delight a customer with an insurance experience. It's with
an AI experience
you need, but you don't really care about too much. So their business model, I think, is just so impressive, and we're getting pretty close now. They were talking about adjusted EBITDA positive by the end of next year, which their adjusted EBITDA is actually extremely close to their net income. So we're basically talking about net income profitability in 2027. It's pulled up a little bit from where I thought they'd be, to be honest with you. And what gets me so excited though is they're going to be running at, what is it, a minus 130 million of adjusted EBITDA or something like that this year. So they're going from that to break even in 1 year. Well, what's it going to look like after that? That's why they call kind of the period where they break into positive net income territory the fun zone in their presentations, because this train doesn't stop. All of a sudden, okay, you continue to have these double exponentials on your revenue side while having linear operating expense growth. And when you just do some simple math on what that means to earnings per share growth, you get to break even, and then very quickly you're in multiple dollars of earnings per share and growing at 50% plus rate for a very long time, at least as we're modeling it. So I think that will be a very fun zone indeed. And I'm definitely looking forward to being a shareholder during those times.
They also talked again about new types of insurance. So you have telematics for the new car customers. You could easily insure someone's phone. So if you notice through telematics that they're not dropping the phone and that the forces on the phone are reasonable or whatever, they could offer them phone insurance that's independent of the phone manufacturer's white label insurance. You could also do trip insurance too.
Yeah, this is something I think you were talking to the management team about on the last investor day. So I think they've got their plate kind of full right now. But one of the things just about them in general is that there's a lot of insurers like Geico, for example, or Progressive, where they just do one line, and maybe they're in all 50 states, but they're not doing home insurance and life insurance and pet insurance, and home insurance. Lemonade's in all of those product lines. They're not in all 50 states yet, but they will be. And beyond that, they're in Europe. So they're multi-product line, multi-geography. So they've got this one, product, or this one back end solution that they've built painstakingly and at great expense. But that's going to scale to massive different product lines and many different geographies. So the TAM here, most people don't realize just how big the insurance market is. It's something like 15% of global GDP or something like that, which is just insane. So you're talking about a TAM
that's over 10 trillion in annual revenue. And I believe as a single industry, it's the largest. It's allegedly larger than manufacturing. Yeah,
larger than manufacturing. It's larger than this data center, boom that everyone is so excited about right now. So this is, as Daniel likes to say, a prize that's worth going after. Maybe it's not the sexiest of industries. I would agree with that, but it's a necessary product, and it is an absolutely massive TAM. And frankly, it's one that's ripe for disruption. Of all the different industries that should be heavily automated and reliant on AI, I think insurance is actually the best one, because so much of it is just probabilistic, assessments of risk. And then automating payouts of those things if a binary outcome has happened. So either you have a valid claim or you don't, and if you do, then you pay it. the logic of it is actually pretty straightforward. And so turning AI loose on that problem is, I think, going to be extremely profitable for Lemonade.
Yeah, it definitely needs to be done in an ethical way. United Health is accused of, using AI and denying health insurance claims at a high rate, and they got in trouble for that. But where you could do it ethically with AI, so people understand, a lot of what Lemonade does is they use AI to funnel intent or the context down into, what is the intended thing that's happening, and then from there they use that to bring it through their system. But they also have machine learning models and big data that they're using as well.
So you recently became a Lemonade car customer. What was that kind of onboarding process like for you?
It was really fast, easy. They did say, okay, well, if we're going to put telematics on your car, you can get this discount, and I need to show them that I'm a good driver. So there were 4 different questions around safety. One of them was, how late do you drive your car, or are you going to drive it much at night? It asks if you're frequently driving in traffic or not. And those were the main things. Do I consider myself a safe driver? So
no, but FSD is.
Yeah. Yeah. And I can be a safe driver. I was driving in England, and that was definitely more sketchy. The roads are they turn a lot more. Visibility isn't as good. So there were times where I had to slam on the brakes to prevent anything bad from happening. So hopefully my rate doesn't go up, because my telematics was on.
Oh, really? Oh, that's interesting.
Yeah.
But they should be smart enough to be able to tell that, okay, you're in the UK. This is not your Cybertruck that you're driving right now.
Yeah, so they would know the location and all that. Yeah, so I think they can use telematics in multiple ways. They talked about the expansion in Colorado and how they were able to cross-sell people right away, or it had the biggest cross-selling results, even bigger than Illinois' cross-selling.
Yeah, which is a huge, it's like free cross-selling that you get. I mean, if you're a Lemonade customer, so like here in Michigan, for example, they don't offer car insurance yet. If you're just a renter's insurance customer here in Michigan, let's say you're paying, I don't know, $200 a month or a year for your premium, and you're just waiting for Lemonade to offer car, well, all of a sudden you can go from paying, $200 just for renters to paying $2,000 a year for renters plus car. And so like Lemonade, like basically for free, just for the cost of sending an email, in these new geographies where they're expanding, can, pick up a very serious kind of like 10x revenue opportunity within at least a cohort of their customers that's going to opt to do this cross-selling. So this is they're in the very early stages of doing this now in the US, and it's something that's going to be driving their growth pretty consistently, I think, for a long time. So this was definitely, I think this was the first time I looked at their in-force premium, and it was so drastically above their guide that it was kind of like a noticeable bump relative to how they've done historically. A lot of times they get accused of sandbagging their guidance a little bit. So they'll, give a kind of narrow window, and then they'll beat it by, I don't know, like $6 million or something like that. And this time they kind of absolutely like blew the numbers out of the water, at least on top line. And so they were forced to go back and raise their guidance for the full year, which I think was some of what contributed to this, massive day that the stock saw. So kind of impressive. If this is the first kind of foray into it, while the loss ratio is still in the 80s, not near the target of like low 70s. And we're still seeing, these promising results. Just stands to reason that when they actually do expand, over the next year or so into all the different states, I think there's going to be more upside there than a lot of analysts were banking on.
Yeah. And they're also trying harder to cross-sell now. So they sent me an email because this other email hadn't yet signed up for car insurance, and I had raised my hand to say I want to be on the wait list.
Oh,
so
nice.
I got an email from them encouraged me to looking into car insurance.
That's pretty exciting. Yeah,
I still have not for them to send an email, right?
Well, it's something they haven't even done yet. I mean, I signed up for car insurance maybe, I don't know, 3 or 4 years ago, something like that, and I've just never heard from them once. So I'm sure that it's coming, but you know, to your point earlier, when the loss ratio is like 100%, you know, it doesn't really make sense to to lean in on marketing too much. Really makes a lot more sense to make sure you're getting your pricing figured out, get the core product to the right spot, so that when it is time to, you know, kind of lean into it, you know, you can do so in a very profitable manner. So I think that's right at the spot we're in right now, which I'm excited about.
So ridiculous question, Matt.
All right.
Do you think Lemonade can grow to the size of Progressive, which is, you know, one of the leaders in car insurance? It's one of the first. They were the first to go big with telematics, but they're not using telematics to a high degree compared to Lemonade now.
Yeah, so Progressive, what is it, $150 billion market cap, something like that. Lemonade's at around 3 or 4, I think, something like that right now. And I'd encourage viewers who are not excited about insurance, go look at the all-time chart for Progressive. It's something like, what is it, 30,000% return all time, something like that. I mean, the chart is just insane. But let's look. I mean, so now we're not talking about, you know, the next 2-3 years. Obviously, we're talking about in the very long term. And I think what Lemonade is trying to do is to structurally build an insurance company for the 21st century, meaning they should be best in class at pricing risk. So they should be able to scoop the safest drivers from Progressive because of their use of telematics, and from Geico and all these other insurance companies, by offering a lower rate to those safer drivers than Progressive could offer them. And so that gets to the scale where, over a long enough time horizon, let's just say 20 years to be, you know, long-term thinkers here, they should be able to be at a revenue line like approximately the size of Progressive today, maybe even higher. But we also mentioned that they're in all those other product lines. So really, you know, it's like, you know, Progressive plus all these other product lines. But then on top of that, the thing that they have that Progressive does not is an in-house built AI substrate that is going to enable them to have this operating leverage that Progressive doesn't have. You know, you're not going to have agents in all 50 states and brick and mortar offices and these commissions that go into perpetuity for agents. So what that all translates to is best in class, lowest operating expenses, you know, for companies of a similar size. And so putting all that together, you know, they'll have revenues that are Progressive size or higher in the very long term, assuming the company executes, and with margins that are like massively better than Progressive's today, I would think. So, you know, I don't want to get too kind of like hyperbolic or, you know, whatever, because this is like, we're really talking about like the 20-year, you know, kind of overall plan. But if they continue to execute and build what they say they're going to build, then it actually stands to reason that they could be worth, you know, significantly more than a Progressive, because they're operating in, you know, more areas, and they are able to do so at much greater margins. So yeah, I actually think I'm not saying this will happen, because any company kind of 100xing is improbable. So I don't want to, you know, say for sure that that's going to happen, but there's nothing in their execution that I've seen so far that makes me think that that's not a possibility.
Today gave us a lot of confidence. So we were wondering about car insurance, which was a pretty big piece of that 9-year, 10-year plan they showed us at Investor Day. I think it's like $4 billion out of $10 billion in in-force premium or more was car insurance. Is that right, Matt?
The number I had in my mind was 6, but that actually, as soon as I had that in my head, I was like, that sounds a little too high. But let's say 4 to 6, you know, somewhere in there.
So for this to finally get started and to get started profitably, is incredibly exciting for us. Also, we were wondering if they'd be able to grow the European business. It didn't really seem like they were spending much money there, and lo and behold, they've tripled the European business in a year. So things are moving along, and our thesis is being proven.
Yeah, it's nice to see, and there still is incredible short interest out there. I think it was 31% last I saw.
Yeah.
So like short squeeze, definitely not part of our core thesis for investing, by any stretch. We're not, traders trying to take advantage of that. But I think it's an important thing to keep in mind that, if we get this moment of capitulation like Tesla had in 2020, that there is definitely the potential for fireworks. So
And
again,
you mean upside capitulation?
upside capitulation,
where
yes, where the shorts capitulate, yeah.
And when shorts capitulate, that means they're forced to buy the stock. I'm not sure how many shorts are aware that they're short Lemonade, and they might have a basket of a bunch of companies. But for the shorts who are specifically, knowingly shorting Lemonade as an individual stock, this was also thesis breaking.
So
yeah.
Along
ahead,
those lines, this is a bit of an anecdote, but I think it's telling. The Lemonade community has some pretty, I think, good natured debates with some bears. I think the most vocal, most intelligent of those bears is a guy named Nick Lamperetti, I think is his last name.
Mm-hmm.
He's had like very thoughtful critiques of like why Lemonade is overvalued and like why it's just like not investable, like all these things. And like, to his credit, gives some pretty thoughtful things. Like I think he's like flat out wrong on most of it, but he at least has his point of view, and
Right.
Seems to be fairly reasonable. Works in the insurance industry, so he's familiar with this space. He's been like a perma bear.
He's an agent, I think, so he's threatened by what Lemonade's doing because they're not using human agents.
He's been a perma bear for a very long time. Today he posted something like to the effect of, it was like, nice time to sell some covered calls after this implied volatility.
Ooh.
So people were like, wait, like you've got to have 100 shares to sell covered calls, and he's like, yeah, obviously. So like he's got to have at least 200 shares. So for a perma bear like that to have kind of not only capitulated and closed a short, which I think he was never actually short, but to kind of flip quietly, I think is kind of interesting. And I think as some of these people who are short, or these funds that are short, kind of see these trends. I mean, these trends, just to if we can pull them back up here, it's pretty clear to see like where these trends are going. And if you want to be short this stock, well, these like really fundamental KPIs are all going in exactly the right operation. Like, this is not projections. This is historical results. Like I think the clock is ticking on when you can be exiting your short position before it just becomes clear that this is a company that maybe it takes a long time to get to the price to book ratio that the bears would like, but clearly these are going to be trending in the right direction.
Pull that up one more time. So if you're short Tesla, you can look at the financials, you can look at the operating expenses and subtract the marketing cost. You can hear the story Lemonade tells all the time about them profitably acquiring customers. So like when they spend that $100 to get $300 in lifetime value, it's you can take it to the bank, but they've also shown it over a number of quarters, and their gross profits are undeniable now. So like this is exactly what you want to see in a business to be an owner of. Like, expenses are going down, gross profits are going up. Like, this is a great thing. And most businesses, as gross profits are going up, I would say, I don't know, I'll be a little extreme here, Matt, but I would say 95% of businesses where their gross profits going up, their expenses are going up as well.
Oh, for sure. And a lot of times, like I've been analyzing a lot of companies where the operating expenses are like roughly growing at the same rate as your revenue, which can be a little bit of a worrying trend. And to be fair, like a lot of this growth is actually fueled by marketing spend, which is stripped out from the operating expense line. So we do need to, at least be clear that, this is not just like pure like natural growth that the company's not paying for. They are paying for it.
Yeah.
But when you look at like their core, like what does it cost to service their customer base, you want to be looking at operating expense minus growth spend for that. And what they've been able to do on that front, I think is like honestly remarkable. And it's like, I would almost, somebody posted today and I completely agree. Like I would almost be like suspicious of fraud if I hadn't been studying this company for so long. Because what they've been able to do, how they've been able to squeeze so much blood out of the stone of their kind of existing operating expense base is like really remarkable. But like you have to go and actually talk to their Adina, who's leading a lot of these efforts to make their back office, extremely lean, and like just like how passionate she is about pushing the ball on AI and like using AI to make each employee like way more efficient. I mean, it was just like, what was it, like a year or 2 years ago, we got really excited about them like sending automated emails, and like that seems so quaint now, but like they did that, they've rolled with it, they're using it more and more, and then they're on to the next thing, they're doing loco and everything else. So it's they have this culture, and I think frankly they have excellent employees, and that's how they're able to achieve these results that they've got. So
we are local for Lemonade. We're long the stock. Our clients are long the stock. We are just under 1% owner of the company, so we don't mind it when the stock goes up. We believe the stock's worth a lot more, but there may be some opportunities to trade the stock over time. Matt, we've trimmed Lemonade in the past. What are your thoughts about Lemonade here? I'm putting you on the spot.
Yeah, you are. So, this is a bit of a, fundamental beat here, I think kind of what we had last year when the stock went from, I don't know, was it 17 to 54 in like a month and a half?
Yeah.
It was like a kind of nice, beat, and it coincided with Investor Day. So there were, and frankly, the stock never should have been as low as it was,
Right.
in that sub $20 range. So I think there was a bit of a catch up at that point, but there wasn't really anything like significantly fundamental. This, I think the real fundamental difference, like that I'm going to have to go back and update my model is just how significant this car opportunity is. I think we were hesitant to give them too much credit for car because it hasn't been proven out yet. The loss ratios, frankly, hadn't been where they wanted to be. The ramp seemed to go a little slower than you and I were hoping, at least, earlier in this year. So
yeah, I thought they would get going in the fourth quarter of last year because they're excited about it and they're a tech company. Then it was also slow in the first quarter, so we were wondering what's going on.
Yeah, so I think we dialed back our own assumptions on how this would go because it was just frankly taking longer than we were expecting.
Yeah.
Now we've got like real, like actual proof that okay, actually it's really going extremely well. Our model is definitely going to be improving in the short term in terms of the numbers that we're expecting to see. Definitely our profitability. I think I had that in late 27. That's definitely going to be early 27 now. And then on top of that, we didn't even speak about this, but the reinsurance, I think maybe we spoke about it a month ago or so. The reinsurance going from 55% to 20% is going to, increase the amount of revenue that they're recognizing, and modest increase in their margins as well. And they shared in their note today that they're able to do that without changing their capital plan because their business is so profitable, which that was actually very surprising to me. I thought it was just kind of a risky move to be reducing your reliance on reinsurance so much, but actually they're just saying no, like kind of business as usual. We're not really increasing our risk of a capital raise in any meaningful way. They also highlighted that on the call that they're being extremely selective around like not insuring heavily in California or in hurricane-prone areas like Florida, for example. So the risk that like some hurricane is going to come through and like blow out their balance sheet and they're going to have to capital raise is quite small now because of how well they've managed this risk.
So pour us some lemonade. All right.
People don't want us to talk for 34 minutes about Lemonade, but I think it's been a while since we gave an update. And I mean, given the magnitude of the stock move today, given the quality of the beat on the earnings report, I think it was well warranted. I don't think I actually fully answered your question though on, like, are we thinking about a trim potentially? You did put me on the spot. So
we'll skip that. We'll skip that question for now.
Okay.
So Tim on the call, he said something like, all engines are lit, or what did he say? He said something really bullish on the call, or was this in the letter?
Yeah, it was like all lights are go or something like that, which should have been all lights are green, I think, but he said all lights are go. It seems to be the case. Like you and I have been talking to Daniel from time to time, just in private meetings, and he's been sharing for a long time his enthusiasm about car. And it's always been this thing that's like kind of on the horizon, almost a little bit like Elon and Robotaxi. Like, it's coming. Trust me, it's gonna be huge. And I feel like now we're at this point where, like, yeah, actually, like, we're like the lights have turned green, and like we're starting our acceleration. We're maybe at like if we're on the drag strip right now, like we're probably up to 25 miles per hour now on the drag strip. So like we're going to be at like 150 in just a matter of moments. But right now it's like we're just at the early stages of acceleration.
All right, let's talk a little Tesla before everyone unsubscribes from the channel.
Probably a wise idea. So I was talking about, Elon's promises about Robotaxi. So maybe we start it there. We've seen some Robotaxi expansion, at least of the geography within Austin. So, at first we had that, very small area when you were there as one of the very first testers. That's the yellow box in the corner. Then we had that phallic expansion in July, and now we're getting a little bit less direct. But the kind of memes aside, it is a pretty meaningful expansion of geography. But is this meaningful or is this not meaningful? I'm kind of curious how important you think the geographic expansion is.
I do think it's meaningful because it does have some logistical challenges. There's some frustrating elements. I thought with a geographical expansion, they would, multiply the number of cars, probably by some kind of square factor based on the area. But Tesla's working on a lot of things at the same time that we're not aware of, or we're taking for granted. So they're building an app. They didn't buy Lyft and use Lyft for the app or the data, which I thought might have sped them up some. So they just added dynamic pricing a week ago or something like that. So they're adding these things to the app. Meanwhile, they're testing the safety and reliability with their safety monitors. They made it clear on the call that safety and abundance of caution are slowing them down. And I think right now with the licenses that they have, they can't have non-Tesla employees as the safety monitor or as the driver, like they have to have in California. So I think it needs to be a Tesla employee.
Yeah. So the reason I asked if it matters is like we do have the geographic expansion, but we're not necessarily seeing a commensurate increase in the fleet size serving this geography. So
essentially 12 cars. So
serving a much bigger area in So it's obviously just a pilot program at that scale. I personally would have thought that by this time we'd be at a few dozen cars at least. So does that concern you at all that we're more or less with the same fleet? I know there was at least one car added.
It does concern me because I thought they'd be at like 40 by now, or maybe 80. So I'm a bit concerned. I go back to that they're building several things right now. And I think they're becoming aware, what's needed from a logistics standpoint as well. And maybe this will come, there might be a date where some legislation from Texas might be going into effect, and then they might just go fully autonomous from there. They have been working on let's call it version 14. They have been working on that internally for maybe nearly 2 months. So they're working on that. So I'm giving them a little bit of leeway right now. I want to see them move fast just because the overall stakes is this safety of the driving public and of also of pedestrians. Like each day that goes by, 123 people, in the United States are killed in a traffic accident, and probably about 1,000 are seriously injured.
Wow.
But managed to live through it.
Yeah. So, on the one hand, you want Tesla to go slow so that you don't put the overall approval of the process at risk. On the other hand, purely from a moral perspective, if we could get FSD out as widely as possible, as soon as possible, even if it's not perfect, it's going to save some lives.
Mm-hmm.
So, I certainly feel that tension. And I think I definitely err on the side of like faster would be better, just on a like purely moral standpoint.
Right.
I want to share a couple quick anecdotes with you.
Yeah.
We've talked for a long time about how like Tesla's kind of been stuck with this like early adopters, and it's hasn't really leapt the chasm to get to mainstream.
Mm-hmm.
I've had a couple different things anecdotally in my own life, my own circle recently, which makes me think we might be close to jumping the chasm on the core auto business.
All right, so let's hear it.
First of all, my mother-in-law, who is not like a tech person, not an environmental person at all. She bought a Tesla just 3 months ago, something like that. Just because it's like, loved the car, loved the performance, like the new Model Y was just like very compelling. So she kind of got over the discomfort, and like I was even talking to her today, like just like even though the way the battery displays as a percentage rather than like like the fuel gauge kind of going like that, for whatever reason, like that was a hang up for her. But like she's kind of getting over it and just loves her car. So like there's a conversion of someone who would definitely be out of your early adopters category, more mass market. My brother, just this past weekend, I picked him up from the airport, had it on FSD for about half an hour. He didn't notice it until about halfway through the trip. And apparently like blew his mind, because he was telling everybody about it like for the next day, just like wouldn't stop talking about like, oh my gosh, like it was so good. I had no idea. And so like, he's somebody who would not have considered a Tesla before, I think, and just seeing how good that was. And he puts on a huge amount of miles. I think he's going to be seriously considering a Tesla. Then my sister-in-law also looking for a new car. Hers just died. And she's like always not wanted a Tesla, but she's like thought they were expensive. And now she's looking like all these cars that she's looking at are $40,000. So she's like, okay, well, the Model Y is definitely a better car. So I think there's a very strong likelihood that she's going to be, going for a Tesla here when she buys her new car very, very shortly. So 3 anecdotes in the last couple months of people who are not in our Tesla bubble that are very seriously considering Tesla, and not just because like I'm a Tesla nerd. So have you had any experiences like that, or what are your thoughts on maybe we finally be crossing that chasm?
I've given up on a lot of people, but my mom, she doesn't like to drive. She can't drive at night. So like, she is very tempted to get a Tesla with full self-driving. But she's used Uber increasingly, and she is over 80 years old. So using Uber increasingly, so she's not driving or have to worry about it. So she's very impressed with the full self-driving, how smooth it is, how good it is.
Yeah, I early days still, but I do still think, in the medium to long term, EVs are going to win out. ICE is dead. I still believe that core thesis, even though we've very clearly had this bump in the road for a while. I want to come back to robotaxis. One other question I had, I sort of assumed that Tesla would be starting with a high price, say $2-3 per mile. Seems like they're trying to undercut Uber right from the start, despite the fact that they're kind of supply constrained. What are your thoughts on that pricing strategy? It seems a little odd to me.
I think it's mainly to encourage the beta testers to extensively test it out without like burning a huge hole in their pocket. So typically, what Uber charges is $2 a mile, and they might add $2 for a pickup. I don't quite think so, but that's but generally it's like $2 a mile. But if it's a short trip, it could be four. Um, so Tesla's charging right now with their dynamic pricing about $1 a mile and a dollar for the pickup, at least in the Austin service area. The service area in Bay Area is much bigger.
Yeah.
So I think it's a little different, but I so help me reset here, Matt. I lost my train of thought.
Well, I just asked you about the pricing per mile, and
Yeah.
so maybe one
I
way
think
to
it's
look at it.
encouraging people to test it without being too onerous, but I do think they're going to undercut Uber ultimately, or at least match their pricing. So
Yeah.
I think that'll be the interim price once they really begin to scale it.
So maybe right now, I mean, if you think about the fact that you have to pay this safety observer anyways, you definitely want to have the cars fully utilized to get as much data as possible. So right now, maybe utilization is the metric that they're optimizing for, not like revenue. But if they if you didn't have the safety monitor in there and you had a fleet of, I don't know, hundreds of vehicles within Austin and it was open to the general public, as long as you weren't supply constrained, I think you'd want to have pricing closer to Uber's, maybe even a little bit higher, as long as you're, again, not supply constrained. You want to kind of, maybe that's the key, is you always want to be maximizing utilization, because the vehicle is still going to be profitable at $1 a mile. So charge that if that's what it takes to pick up a rider. But otherwise, during rush hour or whatever, charge $250, something like that.
While I was testing the Robotaxi, I did use Uber a few times. I did use Uber to ride the Waymo and all that. And I did travel to England, and when I used Uber in England, they offered me a discount plan. So I thought they would introduce this in the Austin area. So technically, my phone had been in Austin, and then suddenly I'm in London, and so I'm vacationing or business traveling, and they offer me Uber One, $5 a month or £5 a month, and basically it took £1.50 off of each ride.
Oh, interesting.
So I think they'll continue that or add that with Austin if Tesla does scale up from here. So I do think it'll be competitive.
Yeah. But maybe this isn't the be all end all of pricing strategies right now. Let's
I don't think they're going to stay at $1 a mile. I think
I don't think so either.
Low. They don't need to do that unless there's a high reluctance for people, beyond Tesla nerds to try it out.
Yeah, I mean, I could see that for like middle of the night trips or something like that, where you just want to have some utilization and like have everyone do that rather than Uber. Sure, maybe you get to some incremental margin that way, but I think your average trip would be closer to $250 a mile, at least to begin with. But let's talk a little Elon pay package. So this saga of the compensation plan is never ending. So the Tesla, just yesterday, I think it was, the board of directors came out with this approval for a $30 billion payment to essentially make a portion of what he'd earned in that original comp plan, just give it to him now. So he actually received those shares yesterday. It's important to note that while this Delaware litigation is still going on, this is essentially making up for those shares that are under I guess some legal uncertainty at the moment. So if that does rule in Elon's favor and he gets the full amount that he was originally entitled to, then he these incremental $29 billion that he got yesterday, he wouldn't be double dipping. So this is a bit of a, I don't know, incremental measure aimed at improving Elon's attention and retention within Tesla. But I was curious, were you surprised by this news, and what were your thoughts?
I wasn't expecting it to happen this early. I do think it was a surprise, but the board, places, as we Tesla shareholders do, we place a high value on Elon's participation in Tesla. And in their letter, they had a key reason why you want to retain Elon Musk is he's a magnet for the best talent in the world. Tesla and SpaceX.
He's a business magnet.
Yeah, and that too. Yeah, that's a dad joke, a pun.
Yeah, it was also on the first time he went on Joe Rogan. I think he's like, "So you're a business magnet?" And he's like, "No, I wouldn't say that. I'd say I'm a business magnet." And I thought that was so perfect.
Oh, all right. So, but yeah,
I derailed us. I'm sorry.
I didn't expect it to happen before the annual meeting, but I'm glad they did it. They did it in a way that makes sense legally, that handles the issue if Delaware decides to provide a ruling on the appeal. So I thought this was a great move by the board of directors and thought it's fair.
Yeah, no, I agree. Obviously, it doesn't solve the whole amount because, as we noted, it wasn't the full amount of the pay package that he was earned. So, presumably there will be some follow up to do something similar, under a new stock based comp plan, presumably, to figure out a way to get him that amount as a contingency, just in case the Delaware case goes against him. But yeah, certainly, I think a good, kind of good faith effort to give him what we voted twice to already give him. Yeah. So I was glad to see that.
Tesla is a Texas corporation now. We did vote for it to be a Texas corporation. Then we voted to reinstate his pay package. So, people are wondering, why did they do this without a vote? Well, in June of last year, shareholders voted first for Tesla to reincorporate in the state of Texas, and second, they voted to reinstate his pay package. So this is all on the up and up, and I think is a great move.
Yeah. I mean, the stock didn't really react too strongly one way or another to it. So, I think it was generally viewed favorably. And I think we all want Elon to stick around and focus on Optimus and scaling up their compute needs and everything like that. Mm-hmm. So yeah, very glad that this happened. Speaking of
I will say this too, is his original pay package was a roadmap for me for Tesla as an
investor. Sure. Oh yeah, me too. So, I remember looking at that and I was just like, this is crazy. Like, yeah, if he can hit these milestones, it seems crazy. But if he can, then yeah, he deserves, 55 billion or whatever it was. But I remember thinking the exact same thing. Like, it was very eye-opening as an investor to see, okay, this is how big he is swinging at this opportunity here. Because a lot of the discussion back then was around like, oh, like you're priced higher than GM and Toyota, and you're close to Toyota's market cap. Like, even if you execute extremely well, like you're still overvalued. Maybe you'd be a double or something like that. But seeing how aggressive he was with the metrics, and especially like it wasn't just market cap, So a lot of times the bears will criticize Elon for just being like a hype man or like saying whatever to like sell a story. It was tied directly to operational and profitability metrics that he had to hit as well. So it couldn't be just hype. And I was so impressed. And then seeing him actually hit all those, I was like, yeah, hats off. You deserve it.
He created 4 times as much value for the world, just in the stock alone, despite the pay package. So, if he created, if in total there was $1 trillion in value created, then Musk was about 200 billion, and the public got 800 billion.
Yeah.
So
Well,
I consider that a fair trade-off, don't you?
I certainly do. Like a lot of the criticisms I see even of that though is like, oh, like he's not the only one that did that. Like there's all the employees at Tesla that worked hard and he's taking all the credit. Okay, how many of them are millionaires now? Like
Yeah,
how many of
we met
them?
some of them.
We've met a lot of them. Yeah, they benefited extremely well. I mean, they don't have a kind of a simple cash profit share the way like GM and Ford do. They're there's a lot of RSUs and stock options that are part of the overall comp plan for employees. So even if you're fairly low on the totem pole and you were you were able to see your net worth like significantly increase as a result of what the company was doing. Elon, obviously driving that, but it was shared with other employees who were definitely part of that execution, and with the investing public like you and I and a lot of others out there. So yeah, the criticism of this, I think the criticism when you like strip away all the surface arguments, a lot of people just don't like billionaires and think once you get to a certain level, like anything else is just greed beyond that. And so it's like it's not fair criticism. It's just I don't like the fact that somebody can have that much money. And that is not a worldview that I think is healthy.
Yeah, because just all the value he's created for everyone, and he's putting us in safer cars. We didn't talk about this early, but if you love them, you want to put them in a Tesla.
Yep,
And it's good
absolutely.
to hear your family's increasingly thinking about them. My brother owns a Tesla, and now my mom's thinking about getting one.
Yeah, I'd love to get my mom in one too, because I mean, she's getting older too, and we live half an hour away, and it's like hard for her to get out here, and it's hard for us to get out there because just how big our family is. But honestly, I think if she was comfortable using FSD, we'd get to see her a bit more. So yeah, it's it's going to be a bit of a learning curve, I think, for a lot of people, but it is something that I'm optimistic that we're actually kind of in the early innings of mass adoption now. One other thing we didn't touch on, Grok integration. Have you tried this in your car yet?
I have tried it. Yeah, it's great to have it in the car. It links to your Grok account, so you can sign on, and then it'll have some of your conversation history, at least for the moment, and you can talk with it. I'm not sure like how much memory there is between rides, but I did find it useful. So I tested out today. Today is my first day back from England. I arrived yesterday, and I was asking it about doing some AI stuff on a MacBook Pro and things around AI and the LLMs and all that good stuff. And we were talking through it.
Yeah, I actually used it to help digest an earnings call for one of the companies that we're invested in, and I kind of didn't think it would do that well because to really like read through a transcript and everything like that, like you need to. A lot of times, even if you're using ChatGPT, it takes a few minutes to kind of think about it. So I thought with a voice mode, it won't do too well. I was really shocked at how good the information was and like how on point the summary of like the main points of the earnings call were, despite the fact that it thought for like maybe 1 second and then just started giving me the answers. I was really impressed with how low the latency was for a real-time kind of technical discussion like that. And it even helped me pick up a bit of information that I hadn't initially picked up on. So, and then I was able to like push on that point, like, wait, what do you mean about like this? And it's like, yeah, here's like, and I was like, okay, tell me exactly what the criteria are to meet this, particular tax credit. And it said like exactly what the criteria were. And then I went back afterwards to double check. I was like, oh shoot, like it is right. Like this is really impressive. It did hallucinate some other numbers. So like, I would not say it's, at the reliability level of like a deep research, for example. But I think for like any type of voice assistant, we want to prioritize low latency and kind of conversational, the nature of it over like getting every single number exactly right to the penny. So I was super impressed with it. And it's funny because I've talked to like 3 or 4 different people, and they've all used it for like vastly different things and all like universally loved it. So I thought that was pretty interesting.
it's hands free, so it's safer than using your phone app. I guess you could have your phone mounted and use your phone a little bit, but in voice mode. But it was great to see it in the car, and that you're able to trigger it by hitting the mic. So that functionality was great to see. But that was about the end of the integration.
Yeah, yeah,
I
that's true.
I did see a hypey post saying, this is the most integrated Tesla has ever been.
The most integrated software plus hardware product.
And no, so it's in the car, which is definitely cool. It's cool to use it hands free, but it doesn't know the location of the car. They may offer offer the option of that. It could look at restaurants in your area, but you had to tell it what area you were in. It didn't really know about your trips. It can't send commands to the car yet, so it's not allowed to change the destination of the navigation.
Yeah. Yeah, I mean, it's not too dissimilar from like if they were to offer like an OpenAI chat app or something like that in the car.
Mhm.
Like there's no controls going from OpenAI to the car, and the same thing, even though Elon owns XAI, the same thing is true right now. So and it's
Mhm.
really cool, and I think if there's deeper integration in the future, that would be really nice to see. Yeah, I think it'd be really great if it said like, hey, we're rerouting you just because there's a traffic accident up above or something like that. Just have the AI assistant kind of chime in with stuff like that. Or
Mhm.
we've noticed you're going to be like slightly late for your meeting. Would you like me to send an email? Like that would be awesome.
Mhm.
So I think there's a lot of integration that can be done in the future. But for like version 1 of sending it out to a car, I still got great functionality from it, and I
Yeah,
think it's been awesome.
and it has a good default mode. So its default mode is, I think, Era, the helpful assistant. So and Era is really good to talk to. I've learned some stuff from Era. So it's not starting off with something that's inappropriate. It's not starting off in not safe for work mode
Which Elon's going hard on that right now.
where it just curses at you, which is I don't find that funny or interesting.
Yeah,
um,
I'm not a fan of
yeah,
a
and
lot of the stuff they're doing on that front.
there is another mode where it is kid friendly, so you could turn that on. So you could turn on it, not safe for work. You could turn on a kid friendly mode, and I think there was one other one. But the default setting is that helpful assistant, and you're able to choose like 5 different personality types. So that was also a nice functionality. Doesn't talk like Jarvis though.
Yeah, I don't know. I've been impressed. The just the low latency and like how conversational it is, I think is a
Mhm.
huge achievement. I think the Chat GPT voice assistants have recently got to a pretty similar level, but for Grok to have from how far behind they were to get such a good quality voice assistant, I think is really impressive. So Elon, as he is wont to do, is moving extremely fast, and we're all benefiting.
I'm cracking up because it'll whisper at you, and you don't even ask it to do it.
Oh, really?
Um,
I hadn't seen that yet.
so I switched, and I think you could do this with Aura. You could just be like, "You got to be quieter," and Aura will start whispering.
Ara, we're in Joe mode.
Joe mode is quiet sounds in the car. But I did change it to Gork. I did try
Ooh.
Gork because Gork's a comedian.
Mm-hmm.
He did want to curse a lot, but Gork was telling some jokes, but then like suddenly, for whatever reason, he started like whispering half the time and talking half the time. He's being all quiet with me. Is this funny to hear it whispering at you?
That is pretty funny. All right. Well, it's been quite the couple weeks. A lot of good news. Lemonade crushed it. Tesla, I think, putting a lot of good things in place fundamentally. We'll see what happens with the continued rollout of Robotaxi, but good to talk with you again, Bradford.
It's
Is the expansion happening?
The expansion's happening. Hopefully they'll go to this next from what they're at currently, which looks like what, 3 of my fingers dropped. So hopefully we get
started
that.
out with that part of your body.
What I really want to see is they either get rid of the safety monitors or like 8x the number of safety monitors, and you really start to serve that Austin market in a big way.
Yeah, ideally both.
Maybe they're sandbagging a little bit so that Uber doesn't freak out just yet. So maybe they'll just go from like 10 to 1,000 or something like that.
That would be pretty wild. I don't think it'll be quite that drastic. I think that would create you wouldn't have the demand for that many vehicles right off the bat. But it definitely seems reasonable to me that, especially once you get the safety driver out of there, safety observer, whatever we're calling them, you at that point you can expand very rapidly. One, because the economics make sense, but two, because like you don't want to hire 100 safety observers and then fire them like a month later. That's just it's not going to go well. So I'm very optimistic about where they're going. Looking forward to seeing the new version shipped to our cars with the Austin learnings whenever we get that. But good talking to you again, Bradford, and welcome back.
He's Matt Smith. I'm Bradford Ferguson, and bye for now.